Hello everyone, this is Dan Gramza and welcome to dangramza.com Market Studies for Monday, April 7th. Well, we had a very interesting week, especially after the tariffs were announced. And we've gone through the fundamentals in the advanced video, but bottom line, it is the market reacting to the tariffs. And what do these tariffs do? They create uncertainty. Stock markets hate uncertainty. The other part of it is, how do you plan on a personal basis, as a manufacturer, as a consumer, as a country? How do you plan for the future in terms of the impact of these tariffs? There's a lot of unknowns here. And as long as that uncertainty swirls around out there, we're going to see it reflected in these stock markets. Now, it's a clean close on Friday. They went home short, no doubt about that. And what we're looking for now is a market that can get low enough to find buyers. And so far, we haven't seen that. Now, you're looking at a daily chart. This represents a swing trade. It implies a trade that lasts from 0 to 3 to 10 days, in that range. The red line represents selling, green line represents buying, and the dashed lines means it's something that happened earlier in the week. That difference here, for example, sell to buy level, is $1,550 a contract. What an interesting market. And take a look at the NASDAQ. It really fell out of bed. And if you look at the difference here, there's something I want to point out to you. Well, first, the dollar difference there is $3,415 a contract. But when it comes to the NASDAQ, it's in a unique position. You want to remember that the companies in this indice, 56% of technology companies are outside the country, our country. In other words, the revenue stream for technology companies, 56% of it comes from outside the United States. In the S&P 500, for that index, 45% of the income comes from outside the United States. And that's why these tariffs are a double-edged sword in terms of what it means to the marketplace and that uncertainty that we were talking about. In the Dow, the dollar difference here was $3,200 a contract. And again, sellers are in control. Over in Russell, what we see there, that dollar difference, $3,000 a contract. And again, sellers are driving this market lower. Plus, remember that these small to mid-cap companies, a lot of their business is with the large-cap companies that we just saw in those indices. So how it's going to absorb this going forward is really going to be interesting. If we look at the euro, the dollar, well, that's what this tells us. The dollar got weaker, and then on Friday, the dollar got stronger. What an interesting... Oh, let me show you that one too. I went by it quickly, but you can see the Aussie dollar, our friends down under, their currency really took a hit on Friday. And what we're looking for in that market is for it to catch its breath. Definitely sellers are in control in that market. Let's move on over to the 10-year. Well, I should tell you about Bitcoin, because that's also one that is interesting in terms of market movement. The sell to buy level in that market was $3,425 a contract. From this buy level to that sell level, it's $6,625 a contract. I'm looking for a sideways move in that market. And when it comes to the bond market, the dollar difference here, buy to sell, is $1,687.50. I look for an inside day on Monday. We're seeing a market that's gotten high enough to find some selling. That means that yields would be up on Monday. That's what it implies. Check out, well, before we do that, let's check out gold. In times of uncertainty, people expect gold to move up. Well, it's not doing that right now. The difference between the buy and sell level there is 10,200. Sellers are in control. I do look for further weakness, but we are approaching buy levels. But boy, we haven't seen that in silver. Look at this market. It's really fallen out of bed. And the difference up here between the sell and buy, 600. But this movement here, the volatility of silver is very interesting, and it can lead the precious metals markets. So keep your eye on here. Sellers are still in control. They're still in control when we look at copper. Copper's fallen out of bed. The difference up here between the buy and sell is $2,250 a contract. This is intertwined globally with manufacturing and building, so this action isn't too surprising as the uncertainty pervades that market. We're seeing it in crude oil. I think in crude oil it's overdone, and from my point of view, the difference up here in those dashed lines is $870 a contract. I don't look for another big day down though on Monday. Now, nat gas, we got temperature changing, that has an impact here, and we have that global aspect of that market. The difference between the sell and buy is $500 a contract. Again, sellers are in control, but we are approaching levels that we may see some buying coming into that market. Soybeans, China is the big buyer of our soybeans in this country. But typically this time of year they buy from Brazil, and they typically buy our soybeans. There we go. That was corn. Our soybeans in the late summer, early fall. So in some ways I feel this is overdone as well. There is a lot of uncertainty around that. $450 is the dollar difference you see there in beans. Now, here's corn. Corn did firm up a bit. I don't look for dramatic follow through to the upside, but rather a sideways move on Monday. So those are my thoughts for today. Thank you for sharing part of your day with me. Have a wonderful weekend. Looking forward to being with you again next week. In the meantime, take care.